Thank you so much for tuning in, and my name is Isaac Jonas, and I like to talk about personal finance and investing. Today I'm going to just share with you what I think about what is going on in the US and Canadian stock exchanges. A lot of investors and other people I follow on social media, they have been saying, is the bull market over? A bull market basically is a situation where when you look at the previous high level for the major indices, let's say the Standard & Poor's 500, the top 500 companies in the US, if it goes up by at least 20% from the previous low level, then it's a bull run. So the market was actually at that level, but now it has started to retrace owing to what is happening in the Middle East, the tensions. People are saying maybe there might be a wider war. What's going to happen geopolitically? Is the price of crude oil going to go up? And what this means is inflation is going to be harder to control, and possibly also what is happening in the US, the Federal Open Market Committee members, including the Fed chair who determine the monetary policy in terms of the direction of the interest rates. You know, they've been indicating that they are not in a rush to reduce the interest rates. And yet the market has been expecting that the rates would be cut more than maybe 3 times. But now the reality is that inflation has been going up, even though the economy has been very strong, owing to the less and less, people who are claiming unemployment numbers. For example, this Thursday, 212,000, only 212,000 claimed or filed for initial jobless claims versus the 215 that was forecasted by analysts. Also, core retail sales, it was 1.1% and versus 0.5%. So the core retail sales, in other words, for month on month, for March, it expanded by 1.1%. So the US economy fundamentally is very strong. Now, the new home sales also, they were lower than expected, 4.19 million versus 4.20 that was forecasted, but at least there were quite a decent number of houses that were sold. Also, the Philadelphia Fed Manufacturing Index, basically it was way higher than anticipated, 15.5 versus 1.5. Basically, the manufacturing sector in Philadelphia, it expanded, because how the US economy works is there are different states and there are different strengths. Like some, the manufacturing sector, let's say they manufacture cars. So how the aggregate of the US economy works is that they then aggregate that, and most of the companies, they have operations across the country. So if the US economy is strong and it's an election year this year, what usually happens is that if the numbers they are good, then the US stock market on average, it has a good chance to close the year on a higher note. So which is good, because what it means is that a lot of people, mostly who are invested in the stock market, they will be richer, they will have more money. But those people who don't participate in the stock market, they may not necessarily have a lot of wealth built in. So that's why for me, I made the decision and my family to say, well, regardless of the small amount that I can have, I'm just going to start to invest in the stock markets, particularly in the US, and also I'm considering Canada. And I sometimes trade commodities like crude oil and also futures for some profits, and also options. So that's something that I learn, through paying for some online course, and also I am an economist by training. So that kind of gave me a foundation. Not to say if someone doesn't have that background can't do it, but the point is I take time to learn, and in doing so, I give myself time to learn and understand the process. But sometimes you actually, you invest money, but sometimes you can, lose money. So that's why for me, my investment strategy is very, very conservative, in the sense that I am looking at the long term. Right now, as the market has been dropping, like today, the S&P 500, it has been dropping, right? From, if I look at the SPY, which is the exchange traded fund that tracks the S&P 500, it went to maybe 499, but it dropped per share to about 495, that level, the last time that I checked. So what it means is, if I look at 3 weeks ago, it was like at 525, but right now it has dropped at that level, and people are already screaming. So what I suspect is that sometimes people, they borrow money, they use leverage. So if the market drops by just 1%, they start to feel the heat, because now they get margin calls to say, if you don't liquidate, we are going to sell some of the securities. So for me, that's why even when I am investing, I don't even borrow money to invest. I only invest in the cash that I have, and I have some cash. And if the market drops, I'm celebrating, because then I'm buying the securities that I want at a hugely discounted price, and only those securities that I understand. I've noted that gold has gone up by about over 11%. It goes up and down. I'm recording on the 19th of April. Yesterday, when there was the report that possibly there was a counter strike from by Israel to Iran, the gold, it went up by over 1%, but then it dropped. But I think at the end of the day, the idea is, when I'm investing for the long term, those fluctuations, those volatilities, they are my friends. If the market drops at such a level that I'm comfortable, like right now, below 500, I'm edging some shares, whether I buy 2-3 shares for SPY or other exchange traded funds. Over the long term, I'm going to be hopefully better off than just waiting to say I'm going to time the market to start buying the index fund at this point. Now, individual companies, I only, like I've said, invest when they are beaten down, when they are discounted, when they are undervalued. That's why I do some videos to share how I value companies. I look at their finances, the products and services that they do, their leadership, and those are the things that I look at. Now, I haven't been buying any individual stock, and this is not investment advice at all. But the idea for me is that when I invest in those basket of companies through an exchange traded fund, or even Berkshire Hathaway conglomerate, which is a lot of companies, including Apple, almost half of the money that is invested in stocks through Berkshire Hathaway Class B shares is in Apple. So I have exposure to that particular stock. They also have Occidental, other very interesting stocks. What that does is the stock price or the exchange traded funds price goes up, I get to benefit from those. But I'm not really over concentrated in one individual stock. Like, let's say if I had invested 100% of our family portfolio in Tesla. Tesla was $240 for $240. I think a couple of months ago, but now the last time I checked, it was $150 a share. So it's more than 30%, I think, drop. And what that means is, if I had 1 million, so I would say maybe 700,000 would be now maybe the balance. But the thing is, only if you sell. But the idea for me is that I only invest in very few individual companies, only when they are really down, and I don't put more than 2%. And I have cash, I have exchange traded funds that trade S&P 500. Right now, I'm also looking at other markets, and I do that for trading, like UK crude. With what is happening in the Middle East, I'm just kind of like trading, buying and selling, maybe for a few seconds, but I take time to learn through the process. I don't just wake up and say, I'm going to trade crude when I don't understand the UK economy. I don't say I'm going to trade Forex when I don't understand, let's say, the Japanese yen and the US. I understand, at least I look at the data, what is happening, what is the balance of payment and all these things. And I do a technical analysis to say, this is what I see, this is what the technicals are saying. I get in at this point and I get out at this point, and this is the amount that I would lose if the trade doesn't go my way, because I don't know really what's going to happen with certainty. So I manage my risk that way, and I take time to learn through the process. So that's what I do, and thank you so much for following my channel. And if you haven't subscribed, please consider doing so. May you have a wonderful, wonderful week ahead, and thank you again. Bye bye for now.